So you're telling me a 17% drop in actual deals is somehow a bull market?
When the total value spikes 26% to hit 1.3 trillion, yes, it's a mega deal market.
It's an AI panic market. I'm hearing if you don't have a chatbot right now, you're getting fire sold.
Oh, come on. OpenAI raising 110 billion isn't a panic. It's an arms race.
Tell that to the legacy software guys begging for a buyout. Let's look at who's actually writing these massive checks. The rundown.
You cannot tell me a $1.7 billion significant risk transfer isn't absolutely fascinating. Värde Partners just threw Klarna a massive lifeline.
Fascinating? Yes. Terrifying? Also, yes. Maya, it's consumer credit. Swedish buy now pay later consumer credit. I spent enough years in banking to know that when you're offloading that much risk, the underlying loans are probably sweating.
Oh, come on. It's a brilliant capital relief play. Klarna gets to free up their balance sheet right before a potential IPO, and Värde gets a juicy yield. I read the structural breakdown this morning. The footnotes on these SRTs are practically art.
I'll let you frame the footnotes for your office. I'm just saying wrapping up subprime Gen Z debt in a shiny fintech bow doesn't make it bulletproof.
Fair enough. Speaking of shiny tech, Warner Music Group just bought Revelator.
Music rights management. Not exactly a headline grabber, but totally necessary. WMG is just expanding its digital footprint.
Exactly. Tracking digital royalties is a nightmare. It's a pure infrastructure play for the music business.
Which brings us to actual infrastructure. Antin Infrastructure Partners just bought Sapphire Gas Solutions from Apollo.
Compressed natural gas. Apollo held that for what, maybe 3 years?
Classic private equity flip. They squeezed the juice and passed the rind to Antin. But it fits the macro trend we're seeing. We hit a record 1.3 trillion for the quarter.
Right. I was looking at the Q1 data this morning. Overall deal volume dropped 17%, but the total deal value surged 26%.
Because buyers are only writing checks for mega deals. The middle market is practically a ghost town.
Wait, really? A ghost town? Associated Bank Corp just merged with American National. Sanlam just upped its stake in Shriram Life Insurance in India. Mid-market financial services are absolutely moving.
Okay, I'll give you banks and insurance, but look at software. The whisper numbers are brutal right now.
Oh, the AI divide.
Yes, if you are a legacy software firm without a coherent AI strategy, you are dead in the water. Buyers won't even look at your pitch deck. You're either taking a fire sale price or praying for a miracle pivot.
The market is completely bifurcated. You have OpenAI taking down a $110 billion funding round and Anthropic raising $30 billion, while the AI losers are facing a total valuation reset.
It's ruthless, but before we get too deep into the AI bloodbath, we need to look at the massive wave of EU regulatory approvals hitting tomorrow.
Capvest buying TSG, SK Capital moving on Swixx Biopharma. The European desk is going to be busy.
We've got a lot of European paper to grade. Let's pull up the Capvest structure. The big one. $1.3 trillion in a single quarter. I am looking at these Q1 numbers, and honestly, my banker brain is short-circuiting. The sheer scale of the capital moving around right now is historic.
Put the champagne away, Nate. You are looking at the headline dollar signs, but completely ignoring the actual deal count.
A 26% surge in total deal value is a 26% surge, Maya. You cannot spin that as a negative.
I am not spinning it. I am reading the data. Yes, total value is up 26%, but the actual number of transactions dropped 17%. This is not a healthy, broad-based M&A market. This is a handful of whales swallowing the ocean.
Okay, fair, but look at who the whales are. It is all AI. OpenAI doing a $110 billion funding round, Anthropic pulling in $30 billion. These are sovereign wealth fund numbers happening in the venture space. AI is single-handedly pulling the tech sector out of the mud.
Pulling it out of the mud or completely distorting the reality of the market. Because when I read the footnotes on some of these secondary software acquisitions, the panic is palpable. Legacy tech companies are buying anything with an AI domain name just to tell their board they have a strategy.
You call it panic, I call it a harsh reality check. The market is violently splitting into two camps right now. You are either an AI winner or you are a walking corpse.
Oh, come on. A walking corpse? That is dramatic even for you. There are plenty of profitable, sticky B2B SaaS companies that do not need a large language model to justify their existence.
Tell that to the private equity guys. I am telling you what the deal makers are whispering right now. The buyer freeze for legacy software without an AI narrative is brutal. If you are branded an AI loser, your valuation is getting reset so fast, it will give you whiplash. Founders are having to choose between drastic pivots or accepting absolute fire sale prices.
I will concede the fire sale point. I saw a pitch deck yesterday from a mid-market supply chain logistics firm. They mentioned generative AI 14 times in 20 slides. They do truck routing, Nate.
Hey, maybe the trucks are hallucinating.
They are hallucinating a higher multiple, that is for sure. But this is exactly my point. This $1.3 trillion record is bloated by artificial intelligence FOMO. It is completely masking the absolute freeze in the traditional middle market over here.
The middle market might be frozen here in the States, but I'm actually seeing some real heat starting to build across the pond.
You mean the European regulatory backlog finally clearing up?
Exactly. The EU Commission is suddenly rubber stamping a massive wave of approvals. CapVest grabbing TSG, SK Capital moving on Swix Biopharma. We are seeing a real thaw.
Which means we need to talk about whether Brussels is actually loosening up its antitrust stance, or if they are just clearing their desks. Voices.
I was talking to a managing director at Goldman yesterday, and he literally used the phrase AI fire sale.
Oh, the drama. But he is right about the volume dropping. The market analysts are all over this Q1 data. Total deal volume fell 17%, but value surged 26%.
Right, we hit $1.3 trillion. The big fish are eating, but the middle market is just sitting on their hands.
Because they are terrified. Look at the quotes coming out of the software sector. The analysts are calling it a clear divide. You are either an AI winner or you are an AI loser facing a brutal valuation reset.
Brutal is an understatement. If you are a legacy software firm right now and you do not have a slide in your deck explaining your generative AI strategy, you are basically unsellable.
Wait, no, I completely disagree. Cash flow is still cash flow, Nate.
Not if your product is about to be automated out of existence.
They are not unsellable. They are just unsellable at 20 times revenue. The bankers are just mad they actually have to model out EBITDA again instead of selling a dream.
Okay, wow. Personal attack on my former people noted. But seriously, the exit opportunities for these non-AI companies are freezing up. Buyers just will not catch a falling knife.
I think you are falling for the hype cycle. Yes, OpenAI raising $110 billion is pulling all the oxygen out of the room. Anthropic taking $30 billion. It skews the data.
It does not just skew the data, Maya. It is the data. The money is voting.
We will see how that vote holds up when the European regulators wake up.
Oh, the EU Commission is definitely awake.
Exactly. Tomorrow we are watching a whole wave of EU approvals. CapVest buying TSG, SK Capital moving on Swix Biopharma. Plus, I want to see if this cybersecurity managed services consolidation spills over into the mid-market before Friday. Spill the tea.
I am telling you, the pitch decks floating around right now are pure comedy. I saw one yesterday from a legacy payroll software company. Suddenly they are an AI-driven human capital synergy engine.
Synergy engine? Please tell me you laughed the banker right off the phone.
I had to mute myself. But the panic is real. If you don't have an AI narrative right now, your buyer pool just evaporated. Poof. Gone.
Good. They deserve the valuation reset. We're seeing companies that were valued at 10 times revenue 2 years ago suddenly realizing they are just glorified spreadsheets. And the boardrooms are throwing tantrums because nobody wants to buy them.
You are so ruthless. I actually feel a little bad for them. They built solid, boring, cash-flowing businesses. Now they're being branded as AI losers and getting told to accept fire sale prices by the exact same advisors who hyped them up in 2021.
Oh, cry me a river, Nate. Solid and boring is fine, but you don't get a premium multiple for a digital filing cabinet. The market is just correcting. The buyers are holding their cash for the actual winners.
But there has to be a play here for private equity. You buy these orphaned SaaS companies at a 70% discount, strip the costs, and just milk the recurring revenue. It's classic bottom feeding.
No way. I completely disagree. The churn risk is way too high. If your software doesn't integrate with the new AI stacks, your customers are leaving anyway. Private equity firms know that. I was looking at the churn data on some of these legacy players, and it's a bloodbath. They aren't catching falling knives just because the revenue looks sticky today.
Okay, valid. You can't milk a cow that is already walking out of the barn. Speaking of things walking out the door, my eyes are going to be bleeding tomorrow going through the EU Commission dockets.
Right, the European regulatory wave. We're waiting on approvals for CapVest taking over TSG, plus SK Capital's move on Swix Biopharma.
Exactly, and keep your radar on the mid-market cyberspace. Word is we might see some managed service provider consolidation drop before the week closes. Tomorrow's radar. I'm keeping my eyes glued to Brussels tomorrow. The EU Commission is supposed to clear a massive backlog of deals.
Right, CapVest buying TSG, SK Capital taking Swix Biopharma. Though honestly, I'm way more interested in what's not on the docket.
You mean the cybersecurity roll-ups?
Exactly. Insiders are practically screaming that managed security is the only thing driving IT provider consolidation right now, but we haven't seen a single mid-market MSP deal close all week.
Give it 24 hours. Bankers are just sweating over these AI narratives. If you don't have an AI story right now, your company is radioactive.
Oh, come on. Radioactive? That's pure pitch deck poetry. They just need to lower their expectations by 20%.
Maya legacy software founders are out there accepting actual fire sale prices because buyers won't even open a data room without seeing an AI roadmap. It's a brutal valuation reset.
I'll believe it's a fire sale when I see the actual multiples in the footnotes, Nate, not just the golf course whispers.
Fair enough. Tomorrow morning, refresh the SEC database. I bet we see at least 2 quiet filings from AI losers getting swallowed whole.